Hello guys, welcome back. This is the Complete Trader. In this video guys, I'm going to be sharing with you one of the key levels that I use to spot trade opportunities. Okay, so this is called the order block setup. All right, or if you like, you can call it supply and demand zone. Okay, but first of all, let me say a very big thank you guys for you staying with me. This is my first video for the year 2022, and I promise this is going to be a lot of there's going to be a lot of information that's going to be shared this year along the lines of technical analysis, technical analysis strategies, and also we're going to be discussing about fundamentals and all of that. So it's a year that is packed with so much, okay, that's going to be giving you real information that will add money into your account. Trust me. All right, so what we have here guys is the order block setup, and I'll run you through that in a moment. But if you like, you can call it supply and demand, because it's actually a concept that is drawn from supply and demand. So the supply and demand theory states that when supply and demand is kind of equal, that the price is going to be stable. Okay, and if supply is greater than demand, price will go down, and if supply is lesser than demand, that means demand is greater than supply, price will go up. Now the reason is this: the buyers and the sellers, they compete in the market using price. Okay, so they compete within themselves using price. So when demand is greater than supply, that means buyers will be competing for the available supply in the market, and how to do that is price, like I said. And so they're going to be beating the price up, and so that's why you have that reaction in price going up when demand is greater than supply. And the opposite is true when you have supply greater than demand. So the sellers are going to be competing for the available demand in the market space, and they're going to be bringing their price lower, okay, to beat their competitors. All right, so based on supply and demand, that is exactly how price moves. All right, so this concept is actually drawn from that. In the market, you have big participants who are operating in the space, okay? And when I talk about big participants, I mean people who will buy in large volume, not small traders. These are people who move large funds, from one asset class to another asset class, from one currency to another currency, and that is going to affect the supply and demand equation, okay, behind that particular asset or instrument. And what you're going to have is price reacting from it. So that's where this whole concept is drawn from. All right, so let's take a look, guys. We understand market structure. We understand that we have to trade in line with the structure of the market, and so this is a concept that is also based on trading in line with the structure of the market. Now there are some instances where we can trade outside the structure of the market based on the overall structure of the market. Now that's a little bit confusing, but we're not going to go into that, but I'm just going to show you this simple order block setup. All right, so what you can see right here, we have a low, we have a high, then right here we have a lower low, okay, and then here we also have a lower high. Can you see that? So that's the structure of the market here. But take a look, guys. We have a low, we have a high, we have a breakdown, which is a break of market structure, breaking this low. Okay, now when that low was broken, we had a break of structure. So what we focus on basically is where this strong movement of price originated from. Okay, this is actually an imbalance. Okay, like I said, guys, when price is dropping like this, you understand that there is supply greater than demand. Okay, and so you got to find the origin of that. So the order block is actually the origin of the beginning, the origin of the imbalance, okay, that caused the break of structure. So we can see right here, price went into sideways movement. Here we have a down close, we have an up close candle, and then we have a drop down in price that led to the break of market structure. Okay, so how do you mark your order block now? You look at the last up close candle before that strong movement of price to the downside that broke market structure. So if you were looking for if this is a bullish setup, because this is a bearish setup, so if it's a bullish setup, we're going to be looking for the last down close candle, right? Okay, so let's do like this. All right, so let's do like that. So we're going to be looking for the last down close candle within that level that actually caused this break of structure we have here. Okay, so we're going to be looking for the last down close candle in this area that caused a break of structure, and so that's where you're going to be expecting the price to come back into, and then you see that ride. Okay, so in this case, guys, what we have is the last up close candle before the drop down in price, and you can see this is a movement that is very strong. Okay, and then that led to a break of structure. That's quite significant, and so price did come back into that level right there until the low of this last up close candle, okay, is what we marked out. That low is going to be your entry zone, or the area where you enter from, and the high right there is going to be your the level where you're going to be putting your stop loss. Actually, you're going to go a little bit above that level to put your stop loss. Now you can, do your multiple time frame analysis. You remember what I taught you guys about multiple time frame analysis. So let's say, for instance, you are seeing the zone on a weekly chart or a daily chart, and you're looking at it and saying to yourself that you are not a position trader or long-term trader, that and so you may not be comfortable with taking that sort of risk. So let's say, for instance, this is your zone. So what you can do, that's your order block zone. So what you can do is to go down on a lower time frame. So let's say 1 hour chart, for instance. Let's say you're looking at another block on a daily chart. So you can go down to the 1 hour chart once price begins to trade into that level, and you can expect price to do something like this. Okay, on the 1 hour chart, where you'll be looking to take another block again. Okay, so that's what your multiple time frame analysis is all about, guys. Sorry for that marking. So you can look to take your entry on that level on the 1 hour chart and expect price to go down. So in that way, you've reduced your risk. Okay, so you can go back and watch the video where I talked about multiple time frame analysis. It is somewhere in this channel. All right, so guys, that is what an order block is. Now, talking about your stop loss. So your stop loss is actually going to be placed above the level, and your ultimate TP is going to be targeting this low from where we see price return back into the order block zone after the breaker structure. Okay, so you can see that there was a breaker structure here. So, and then the market did set a low and then return back into that level. So this low right is going to be the area where you're going to be looking for price to come back into. Actually, what you can do in a real life scenario is to take your take profit just a few pips before price gets to that low. Okay, so that way you're being conservative, right? And so that is where you're going to be closing your ultimate profit. Now, if this was a daily time frame, for instance, on the 1 hour time frame, you can take profits from different levels. Okay, but that level there is going to be the level where you're going to be collapsing the total of a trade. Okay, so that is the order block setup. So in the coming days, guys, I'll be sharing with you some trade examples, live examples on how this works. Okay, and you'll be seeing that live. And then you have to understand that just as it is with all technical analysis, it doesn't give you the whole view of the market, okay? Because there are times when the trend will change and all of that stuff. Other blocks will fail, and I'll be giving you examples of how that happens and why it happens. So stick around, guys, and we're gonna be looking at that. So, but let me give you now an example. Okay, so right here we can see an example that just happened recently. This one happened on gold dollar. Okay, so the dollar had been bullish across board because the Fed is kind of, signaling that they are going to be hiking interest rates. So the market is actually pricing that in. And so there's been this dollar demand across board. And so you can see things like Oxy dollar, crashing, dollar card being bullish. Dollar's just been bullish across board. So there's this strong dollar demand. And so we can see that we had an order block here. And so based on the fundamentals, that's actually what's happening behind the scene. Okay, but based on what I just taught you right here, which is the order block setup, we can see that we have a last up close candle. Okay, so we have the last up close candle there before the crash down in price that led also to the breaker structure here. So we can see that level was actually broken there with just a little price movement that broke the structure there. Okay, so this was just a good example. A daily chart, for instance, is what we have here. Okay, so that's your higher time frame analysis. So you may not be comfortable taking all the position, or I mean all this zone, okay, and putting your stop loss above there. So what you could do is to go down to a lower time frame, like the 1 hour chart, for instance, and expect price to, you know, break structure, okay, and then return to an order block level where you can now take that trade, because that level now is kind of small for you to place your stop loss with. Okay, and so multiple time frame analysis can actually be done through different time frames until you get to a point where you're comfortable and confident enough to take the trade. All right, so like you can see, guys, if you were taking this trade in a real life, let's assume that this is a lower time frame or any kind of order block or any other block on any time frame. Okay, so that is the level where you're going to be taking your entry. Okay, the low right there, and your stop loss is going to be somewhere above there, just above the order block zone. And we can see how price did drop significantly. Okay, so when you look at the structure of the market, you can see we had a low, we had a higher high. So in other words, market has been bullish, right? So we had a low, we had a high, and then we had the breakdown of price here breaking through this level. Now watch what happens, guys. Can you see the drop in price? This was really strong. That is actually telling you that at this level right here, there is so much supply that came into the market and very little demand at that level. Okay, so what we can see is that so much orders in form of supplies are still resting in that level, because that's the only reason why you can have this price drop down if we were to explain things solely based on the supply and demand theory. Okay, and so that led to the breaker structure here. So when you count this, you can see that it took only a few bars, few candles or candle bars for price to get to this low. Okay, but when price was to return into that level, okay, and this is significant, this is on the daily chart. So when price was to get back into that level, you can see it took price, you know, a lot of days compared to this one here, this drop down. It took price a lot of days to get back into that high. Okay, so this suggesting to you that this is actually a correction. It was simply a correction back into that level where we had that supply area. So you understand that, you know, based on what people are taught, trend line analysis and all of that stuff, people are going to be buying at these levels, and the breakout at those levels. And lots of people are going to be trading this as supply, resistance turn support right there, and buying into that level, not knowing that this is another block zone. And so the moment they got in there, you can see the drop down. So these guys are actually giving their money away to the big boys, because they are buying close to where the big boys are actually selling. And who do you think is going to win? Anyway, you understand what it is, guys. When it comes to supply and demand, the people who have the upper hand are going to win. Okay, they will trade in larger volume. So you have this guy selling in large volume, why this guy comes in here to try to buy. Okay, so the pros are actually selling at this level. That means the big boys. All right, guys, so that's exactly what it is, guys. In this video, I don't want to make it super long, because this year, guys, I want to be very time conscious. So you guys expect so much more from me, and don't forget to like and subscribe. Like this video, guys, and like it, please like it and share it, and subscribe if you've not yet. So when you like it, it will help the YouTube algorithm to actually, you know, find out that this is a helpful video, and they'll be able to show this to other people who may need this kind of stuff. So thank you, guys. Thank you so much. Now, if you would like to see any kind of content, or you have any question whatsoever, you can drop in the comment section, or you can chat me up personally, however you want it. So that's what it is, guys. Cheers.